Good morning, everyone. This is another episode from the Shadow Voice, and for today's video, I believe this is going to be the last time I'm going to talk for a while about this whole repo incident with the New York Fed, because I think at this point we can kind of get an idea of just how bad things are getting. And so, to start off, I'm reading this article from the Wall Street Journal, and I'm going to highlight the important parts of this. So, New York Fed has said that they would continue to offer at least $75 billion daily to finance the banks and to add liquidity to markets through October 10th. So we're looking at the very least close to $1.7 trillion that the Fed is throwing out to help these central banks stay afloat. And for a lot of you, you're probably thinking that that's an unreasonable amount of money, but there's a lot more information into this. But I'm going to start off with this paragraph. Investors this week have highlighted declines in bank deposits held at the Fed, known as reserves, as a driver of this week's funding volatility. But the New York Fed officials said Friday they were also examining whether the distribution of those reserves across the banking system, and not just the absolute level, had contributed to cash shortages earlier this week. So right now, bank deposits are now on the decline, and they believe the New York Fed believes that this is responsible for volatility. And so now less people are depositing things in their bank accounts, and less people are saving, and no one is buying these negative yield bonds. And so now the Fed's in trouble, and interest rates are spiking much higher than what the Fed initially wants, which is around 1.75 to 2% in interest rates. And then, so the next thing going is and this is a quote from the New York Fed President John Williams, that ability of the system to move money around and redistribute, it didn't work the way we've seen in the past. And this was an interview on yesterday. And so from here we see that. So yeah, the Fed president's basically highlighting that they're in trouble, and right now they need to, and so basically they need to be on life support in order to maintain liquidity. And then the next thing, the New York Fed said on Friday it would continue to offer to add at least $75 billion daily to the financial system through October 10th, prolonging its efforts to relieve pressure in money markets. Okay, and so we're basically just a repeat of what was just said. And this is the most important part, I think, not a lot of people may be covering, because this just shows you that the Fed and the banks have absolutely no interest in stopping this lending. And so in addition to at least 75 billion in overnight loans, so from here all the way to October 10th, the Fed said it would also offer 3 separate 14-day cash loans of at least 30 billion each next week. The Fed will conduct further operations as needed after October 10th. So for all we know, that the Fed could just be lending $30 billion each week at this point, and it may never stop, because now the banks, the Feds, they are hinting at they have no interest in stopping this repo cycle. And I've even read some other places and seen some blogs that talk about how there could be entire repo printing operations being set up to help keep these markets going. And at that point, we might as well say that this entire system is on life support, because there's no other way to call it. Because in life support, you're basically on your deathbed or on a bed. And if you're a person that represents the system, then you have to constantly keep on getting nutrients flowed into you unnaturally in order to maintain health and be alive. So at this point, it's safe to say that this entire market is on life support. The bubble's already popped, in my opinion. Like, the person's already almost dead. They should be dead, but the Fed or the doctors are not allowing the patient to just die. They're trying to keep them alive as long as possible. So we're basically just a potato. I mean, just something that's being held up, but it can't function without this system, without this support. And this is the most ironic thing that I'm reading right now, and this is from Mr. Williams. This is, I would say, central banking 101, really. This is what the Fed's open market operations are designed to address: directly provide liquidity into the system, which supports market functioning. No, it's not. I already told you, or I already basically told my audience how this is not central banking 101, and it doesn't take a genius to figure this out. Guys are literally putting our entire market on life support. The banks are on life support. And so now it's only a matter of time before they can't print money anymore. They can't do it because it's going to be too much for them to do at this point. It's on life support. There's just nothing that can be done. It's just dead. It's dead. And so any of you out there that thinks that this market can continue to rise, like the Dow can go above 28,000 points, 29,000, 30,000 points, it can't. It's dead. It's dead. It's just dead. I'm not trying to be harsh. It's just that I've seen people out there who talk about the market is going to continue to rise. But the thing of it is that the Fed already, they gave a lot of the big oligarchs and the multimillionaires and billionaires like a cut in interest rates that they didn't want. They wanted a really big cut, and even President Trump wanted the Fed to go all the way down to zero. And the Fed can't even maintain their current cut. They have to do these operations in order to maintain their current cut. So the idea at this point, in my opinion, of the Dow and the markets going above 30,000 or even close to 30,000 or even above possibly 28,000 is all not happening. It is not happening. It's fiction at this point. And so I'm gonna keep reading because there's some other thing that I'm trying to find. There's an important part. Here it is. So the timing is also important because there have been periods in the past year when demand for cash has exceeded the ability or willingness of investors to provide it, leading to spikes in the rates investors charge banks in repo. Yeah, because what we're basically seeing right here is that now the demand for cash, it's there, but the supply is low, so now you got interest rates spiking, and now the Fed has to maintain this. And then here's another thing that happened at the end of last year when the repo rate traded as high as 6%. And remember, the interest rates back then were roughly less than 3% at this time, so it doubled its trading rate. At the end of last year, when the repo rate traded as high as 6%, pushing Depository Trust and Clearing Corp's GCF repo index to a then record 5.14%. Repo rates also notably rose in April when people withdrew cash from the banking system to pay federal income taxes. So what we see here is that we can correlate the need for repo with people withdrawing money from their accounts. So now we're basically seeing all across the U.S. big people, maybe middle class, they're all starting to withdraw cash out of their banking system when this entire interest rates just spiked. And so now maybe if I were you, and I'm certainly have been planning this in the long run to try to transition most of my savings like out of my current banking account, because right now the Fed has lost control of everything, and for all we know that within a month or two, or maybe a couple of months from now, the Fed has no choice but to go to zero, if not negative interest rates. And the United States hasn't seen near zero interest rates since 2008, and we've never seen negative interest rates before. So what do you think is going to happen with anybody, especially rich people who don't want to pay taxes? I've seen so much cuts in tax, now have to pay their banks to keep their money. All their stuff's going to be gone like in seconds, because one, those people didn't want to pay taxes, and then two, now they have to pay to keep all their money in their bank accounts, and they probably have a lot, talking like hundreds of thousands, millions, not sure about billions in their savings accounts. They're probably going to diversify with multiple banking accounts, but even then you're still looking at, they're so afraid of losing all of that money that they're going to pull out. And that's, if you're thinking from their perspective on what kind of person who doesn't want to spend as much right now and just trying to save, they're afraid to lose. It's not about spending to gain, it's about fear of losing. And so now, once we get down to the zero to negative interest rates, you gotta be out of the banks. You cannot have money in the banks, because it's going to be bank runs. And then here's another thing that I found that is also interesting, because it just shows you that the banks are in dire need of these repo operations. So on Friday, so yesterday, banks asked for 75.55 billion in reserves, which is 550 million more than the amount offered by the Fed, the New York Fed, offering collateral in the form of treasury and mortgage securities. So at this point, they're just reconfirming what I've said earlier. They're on life support. They need protection, they need security, and if they don't get it, then they're basically dead at this point. They're going to need to go into negative interest rates because they've lost money. And so then we're going to see the need for negative interest rates, if not bank runs. Or not need bank runs, we need to do bank runs. And then, so overall, within the next coming weeks and the next month in October, we definitely need to be prepared the most for this upcoming recession / depression, because it's going to come a lot faster than many out there are saying. Because I've seen some shows like on RT, Chrissy I, she believes that according to the times we've had the inverted yield curve, the 2 to the 10-year yield curve, on average, it's about 16 months before the actual recession comes. But the thing of it is that we've already, after the yield curve, we now have the need for this repo operation. And in 2008, when the Fed needed to do repo for the banks, like that's when the whole system was coming down. The whole system was coming down at that point. And then by the time we hit March of next year, from October 6th, when they introduced that operation, the entire global economy bottomed out. So there's not a lot of time. And with this quarter basis point cut and everything, and they're unable to maintain it, shows that this entire thing is coming down sooner than what everybody is saying. But anyway, hope you enjoy this video. And I know this sounds kind of alarming and stuff like that. And this entire channel is not going to just focus on alarming. I'm going to also be providing tips on how to buy cryptocurrencies like Bitcoin, transition out of savings. If you want my advice, how to buy precious metals like gold and silver, so that we all know what to do, especially for newcomers that aren't as willing to just do it on your own because you're kind of nervous that you're making a big gamble. Meaning it is, but at the same time, it's going to be more costly in the long run if you don't do it now. And so for these next couple of videos upcoming, I'm going to talk about the fiscal year 2020 budget that's going to be introduced on October 1st. And then I'm going to make a video highlighting all there, and then possibly make a video on tips such as how much gold and silver you should buy depending on your income, what to buy. So like, should you get 100 ounce to kilograms worth in a single package of gold or silver, or should you ration yourself down to grams, ounces and stuff, or half ounces, quarter ounces? Because I think it's based on your personal income that's going to determine how much you need to buy. And I'm also going to provide links of good dealers that you can buy from, and also where I get my precious metals and cryptocurrencies from. Anyway, hope you enjoyed the video, and if you can, please make sure to donate to one of my cryptocurrency wallets that's listed in the description. It really helps support this channel, and I'll also help you guys as well, providing more content of what to do in these coming weeks and months ahead. Overall, thank you, and see you guys in the next video. Bye.